When a company lists on the market, it has to issue a prospectus for its IPO. What's the situation if there is a reverse takeover? A petroleum company backs into an existing listed company.
I think, given like what Tony was saying, there's a need for transparency and all that good stuff. The RTO and IPO process, pardon me if I'm being very, very direct about it, it's not much dissimilar. There's still a requirement to understand what is this company trying to buy another company, what is there that in driving the value. So there will be still a demand for some form of QPR or something like that to be able to understand what are they placing money against. I think that hasn't gone away, in fact, RTO or IPO.
Right. Let's ask Chong Lek from the Singapore Exchange what the regulations are.
So for an IPO and an RTO, Eddie, you are correct. The admission requirements are the same. So the company would have to prepare a independent qualified person's report from a reputable firm, perhaps a firm like Gaffney Klein Associates. So I think that part is the same. But really, what I'd like to hear both your views on is the cases where companies that are not in the E&P business, they make acquisitions of E&P assets. And I'd like both your views on how that compares with an actual E&P company that goes through an IPO or an RTO process.
Because, when we had a discussion about coal, we had this amusing example of a New Zealand ladder manufacturer buying a coal mine. And the question came up, how much disclosure and knowledge and transparency are you going to get in that process?
I think if you're, Chong Lek was leading to that question, if you're a company who was just buying another company, the governance that is put in place and the so-called requirements for reserves report by independent party, it really depends on the company. Right? If the company had one which is good governance, then the board member is going to say, I want to see the reserves report, if I was on the board. Some of them don't, and of course, there are companies who come in and out, buying companies who are, the acquirer is a non-upstream company, and they do the deal based on $1 per barrel. Somebody whispered in the corridor and applied that, and the deal was done, and then when they decide to go for financing or decide to raise more capital, get a GCA report, and then horror is something else. And so why, when you come to an IPO process in RTO, I think the big differentiator is there's a lot more transparency in the process. I think, institutions like the SGX will lay out very clearly what is the process, what are the documentation you require, who needs to sign off, and things like that. And to me, from a governance perspective, you're still pumping in money in different form, IPO or an acquisition, but with that IPO, RTO process, there's a lot more transparency and a lot more confidence, I would say. Because there's a lot more people involved rather than just the deal team leader on an asset acquisition.